Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Elconin, along with Brianna Valesky, and we have Serge Berger on the line. He is head trader and investment strategist at the Steady Trader. How you doing this morning, Serge?
Good morning, Joel. Good to be on.
All right, so we had a topsy-turvy week last week. The June futures rolled over to the September, had some good two-way action. Looks like we have some grease fears pulling down the market here this morning. I mean, how long can we just worry about grease and put it behind us? Is this thing just going to keep? It seems to me we were talking about grease 3-4 years ago, and here it is at the forefront.
It seems to me like we're sort of having these summer tantrums, once every summer over the past few years, and that's just one of those things where, the language is getting more and more hostile out of Germany. I think this morning was a good evidence, down 70 basis points on the futures, but you know. I just have a really hard time imagining this is going to be something that's structurally bad for the market. I just think that has been priced in. That's you continue to get these like near term sell-offs and bumps here and there, but I have a really hard time imagining this is going to really blow things apart in a big way.
Yeah, that's we had Reverend Emmanuel Lemelson on, who's actually spent quite a bit of time over there, and he thinks that if they're small countries, the biggest impact that we're having right now is just in the headlines here. So have to
Yeah.
agree with you on that one. Uh, Going later in the week here, we have a big event coming up on Wednesday, the Fed meeting. They're supposed to give us some insight into their policy here, some weak industrial production numbers this morning. What's your approach going into that Fed meeting, and perhaps looking towards the end of the week?
Yeah, I mean, I think we obviously have a really big day on Wednesday. Just because after talking to the street a lot last week, it just seems like people are really on edge in terms of what they want to make of a potential. Some of the guys have gotten even quite hawkish here for Wednesday. So for me, from a technical perspective, I've reduced long positions last week. I'm have a couple of positions left that I'm going to reduce down to maybe some like 75% cash going into Wednesday.
Wow.
A few single name stocks in there like a Walmart and things like that I just don't think are going to be that correlated. But I don't really feel like as a tactical trader with sort of multi-week time horizons, I need to really lean out of any windows going into a meeting like this. If we catch a pop or something sells off, fine. Then maybe I've missed a day trade. I can live with that. I don't want to live with like a 3% drawdown, just because of that. So, that's my fear. The problem I think with Wednesday is that we have basically one trading day on Thursday that's fairly normal, and on Friday we have I think quadruple witching options expiration. So, to me, this is a classic week where I take a step back and just make sure I don't make any mistakes, anything stupid. I think this is really more a risk management week for me. Uh,
75% cash, and this is of like your real money, or is this of your trading portfolio, your swing trading portfolio, or is this
yeah.
or 70 this is 75% of the farm?
No. This is so the farm, encompasses obviously longer term buckets like retirement accounts if you want to talk about personal money, but this is like the funds and all the real money that I manage in that sense, which is all sort of multi-week time horizons. There's none of that stuff is like long term.
Wow.
So yeah, definitely just going 75% cash. You know, I just think in this game, it's all about not making big mistakes. And it's like I was a big golfer back in the day, and like to me, it was always like as long as I don't mess up on the tough holes, like on the par threes, like over the water, as long as I don't like make a double or a quadruple, I'll be okay. I knew I could like birdie a couple par fives, something like that. It's the same thing here. You just have to stick it out and make sure you don't really head get ripped off by one announcement. That's just not
You don't
worth
you
it.
don't like try and cut the dog leg going over the trees with hitting a 310-yard drive, something like that. Playing it steady. Well, that's why they call you the steady trader here. I was just curious. When is the last time the steady trader portfolio has been at 75% cash?
We've been 75% cash a couple times. this year. I mean, this year has been a struggle of a year from the perspective that I don't think there've been that many opportunities, and it's that way. That's why it's even more important for me in a year like this to make sure I don't like make an unnecessary mistake, because the market's been tough enough from a multi-week swing trading perspective. So we've been 7% cash a couple times this year, but it's definitely more been the exception than the rule.
Do you try and maybe play the downside a little bit? Maybe I mean, if you have this indecision on the long side, maybe some out of the money puts or selling calls is a little bit more risky. But is there anything that you would try and do, to catch a nice down move?
No, absolutely. I just like to me, I continue to look for a 10 to 50% correction at some point over the coming few months. I think that remains my base case. I haven't seen anything go against that. We've talked about this last week. I do think that's this volatility that we've seen in other asset classes just hasn't been anywhere near equities. And
Okay.
in relative terms, the equities are just trading at too low a recent historic volatility, and certainly at too low an implied volatility. So yeah, for sure, I'll play it downside. I just want to see important sectors break down. So far, we haven't seen any. The financials are just continuing to act well, and I just have a really hard time going against the financials in the broader sense.
Okay, well, let's get some takes on some issues here. The news out over the weekend here. Micron technology here. Favorable ink from Barron's, but a downgrade on the street here. Broken chart here in Micron. Is this something you're participating in or looking to participate in?
Not so much Micron. What I've been looking at is Intel, and I actually think Intel looks like a pretty decent short. I know it's like we've come to a point where the stocks obviously sold off quite a bit already this year, but technically I can define my risk much better in Intel at this point than I can at Micron, just because of the way the recent sell-off has been fairly steady, and it in Micron and in Intel, I feel like I have better lines of resistance and support, including basically a complete head and shoulders pattern to
Uh-huh.
lean against on the short side.
Are you more apt to short it going through the support here near the
Hmm.
$31 level, or would you rather try and be patient and short it into a little strength here? It looks like, revisionist history, though. It looks like there's pretty good resistance at the $32 level, 32.10 to 32.15, back in the lower 31s today. What would be your approach? Short it on the weakness, or wait for a little pop so you can define your risk a little bit better?
Yeah, so actually I think what we saw was that important lower high on the 29th of May, which was basically a 200-day moving average in the right shoulder and just lateral resistance, right? At this point, we've had a couple of days of sort of bouncing back and forth between the 32.10 that you just mentioned and roughly 31.10 or so, which actually right now we're just drip below. So to me, I want to see a little bit of weakness below there. I'm not going to short this here at the open, but I wouldn't want to short this in a bounce just because I then would feel that it just bounces back towards 31.10, and then if it goes above that, then it's definitely done. So I'd prefer to short in weakness, and there you go, $31 right now.
Okay, and some other stocks here. We got to talk about the biggest stock of all, Apple Computer here, trading down a buck 37 here. Been in the trading range. Any takes on Apple here? Let's see here. Do have a low here to keep an eye on here. We did hit 125.76, but the bloodletting in the S&Ps is not letting up here at all. 125.62, that was your low going back to Tuesday of last week. We're getting awful close to that level. Any take on Apple?
Yeah, so I think Apple continues to be a thing where basically last week was a real opportunity for the stock to do something. It didn't. So, I think we need to wait until earnings. I mean, that's my bigger picture point. I mean, I see certainly if the stock can show us weakness and actually close a little bit lower than just it's still stuck in a range, but there might be momentum down towards 120. It's very much like the broader market stuck, and that's not surprising considering the insane market cap it has, right? So I think tactically people are probably better off just waiting until earnings come out at this point. Unless you're day trading, of course, which is a different game.
Yeah, a whole different animal here. Okay, big continuation to the downside here in the S&Ps there. We just made a pre-market low here. We took that out. We've gone to 2066 here. So selling continuing here off the open. Other stocks to take a look at. CVS is in the news. They are buying the Walmart facilities, or not Walmart, Target pharmacies. Got a little pop off that. Any opinions on CVS or Target?
Yeah, I mean, look, good news, right? I mean, from maybe a longer term perspective, from a trading perspective, I don't see anything's changed. I've been looking at CVS for a long time. I just wanted to be able to clear 104.30 or so as sort of what I have circled. Otherwise, you're just playing the chop, and that's okay. You just have to have tighter time horizons. Target. Similar. I mean, the last 4 days have been a disaster in terms of choppiness. But if you can get above, 81.30 or so, maybe, then you might have continuation. But the theme is the same thing all over the place. It's very much linked to the broader market, which is very choppy. That we get grease all of a sudden on Monday morning. We get a choppy Friday. We have the FOMC on Wednesday. It's choppy, So I feel like that risk aversion call of mine is sort of really what I want to stick to. Or you trade stocks that are totally non-correlated to the broader market, which of course are difficult to find.
Okay, moving on here. Let's go a little bio here. Bluebird Bio, BLU, had some good news out this morning. Was trading up here, just not as much as it was. Any takes on the bios?
I don't even know this ticker.
Bluebird,
What is it?
BLUE.
Oh, blue. Okay, there you go. Yeah, I remember this one. Yeah, I mean, nice wedge, right? I think if we can get above 190, that could be beautiful. I'm always a little hesitant with biotech if it's not one of the real large ones, just because I just can't usually get my head around them in terms of actually getting into the real news flow and understanding the entire pipeline stuff. But if you just want to play this purely technically, yeah, I mean, what do you think? 190 above would clear that
Yeah,
flag or that wedge, right?
yeah. I mean, the way these things move around with news, it's really hard to short them
Yeah.
here. I think on this one, I tried rather instead of buying into the momentum, try and find a support level and kind of buy
Sure.
into that because it just definitely these things just move so much. With the news, I believe they had some favorable drug news today. It's given a lot back here. Maybe keep an eye if you want to pick this up on the cheap here. You got a couple lows right around the 178 level.
Yeah.
Let's just go. Let's just talk about. I know you like to follow the financials pretty closely here, and a lot of money has been pouring into the financials as of late. Now with the looming interest rate rise coming, let's just take a look. Couple charts of some of the big financials. Maybe starting here with Goldman Sachs. Any take on Goldman Sachs?
Yeah, so I should probably disclose that I think I talked about this last Monday with you guys. I was long Bank of America, sold that later last week just to raise more cash, again going into this coming Wednesday. I think they're all a little extended. That's been the problem I have with them. Bank of America, I could find my risk better. Goldman Sachs, it's been a straight shot higher since basically late. Early May, I should say, and it's just due for a breather. It remains, within its channel. I don't see anything broken, but again, I probably wouldn't touch this too much now this week, at least until we get hopefully some clarity out of the Fed on Wednesday. But again, it's overbought is my immediate term call here. That's why I sold my banks last week.
What made you sell the Bank of America?
I sold Bank of America, because I just didn't want that sensitivity exposure to Wednesday. So I started scaling out of long positions last week, and also it had a steep run. I mean, look, it rallied, since say the 3rd or 2nd of June, pretty much, straight up. For that stock, that's a fairly steep move in a short order. So just wanted to take some profits.
Okay, all right. Serge Berger, he is the head trader and investment strategist at the Steady Trader. words of caution here going into the Fed meeting, and well taken today as the S&Ps have come down to 6450 here. Dow is down nearly 200 points, so continuation sell-off here from the pre-market trading. All right, Serge, we'll see what the Fed has in store for us this week and the quad witch, and we'll be back with you next Monday.
Wonderful. Thank you guys. Have a great week.